So how much is it actually going to cost you to purchase a home in BC? In today's video, I'm going to go over all the closing costs involved during the transaction. That's including before the transaction, during the accepted offer period, and also at the time of closing. I'll do my best to explain everything to you in great detail so that you're not surprised during the process of purchasing your home with hitting costs that you weren't prepared for. My name's Caileigh and I sell real estate in the Langley and the Fraser Valley area, and before I jump in and go over all this great information I've put together for you, I would ask if you can hit that like button and the subscribe button. It would be greatly appreciated, and it helps me get my message out to more people like you. As always, there is also a link below where you can book a 30-minute call with me to discuss anything real estate. Let's start with mortgage default insurance, which I know isn't a super exciting topic, but you're going to want to know how much this mortgage is going to cost you before diving in. When someone is putting between 5%, which is the minimum down payment requirement, and 19.99%, mortgage insurance is mandatory in Canada. In other words, mortgage default insurance allows Canadians to qualify for a mortgage up to 95% of the purchase price of that home. This insurance is meant to protect lenders, banks, and other financial institutions should a borrower default on their mortgage payments. Essentially, it allows that lender to foreclose on a property in order to get back the money that they originally lent out. One popular mortgage insurance that you might be familiar with is the Canada Mortgage and Housing Corporation, also known as CMHC. Now, the cost of getting mortgage insurance is dependent on the down payment amount you are putting forward, and it's calculated on the total mortgage loan amount. Typically, this fee is anywhere between 2.8% to 4%. The larger the down payment, the lower the fee. That mortgage insurance fee is added onto your mortgage amount, so it's financed over time. You're not out of pocket it, and you don't have to pay it all up front at the closing table. So yes, it is an added fee, which isn't great, but it also allows you to qualify for a mortgage without having to put that 20% down. I will add that on any home that's priced over $1 million, unfortunately, mortgage insurance is not available because the minimum down payment requirement on a $1 million property is 20%. Before going out and shopping for a property, we're also going to need to know how much of a down payment you'll be required to put down come closing day. If we look at an example of a home that's priced at $800,000, you would be required to put 5% down up to $500,000, so $25,000, and an additional 10% of the amount between $500,000 and $800,000, which would be another $30,000. So on completion, your minimum down payment requirement would be $55,000. One thing I want to add is that if you're watching this and you're an investor, so you're planning on purchasing a property that will not be your principal residency, you are required to put a minimum of 20% down, no matter what the purchase price of the property is, and therefore would not be eligible for mortgage insurance. Next, I want to talk to you guys about GSTs that potentially could be applicable on the purchase of your home. Where GST is applicable in BC is on new homes. So for example, new constructed homes or pre-sales that you may buy from a sales center that have not yet been built. Those homes will have a GST that's added on to the purchase price, and that's going to cost you an additional 5%. So where GST is not applicable is any resale home. So GST in BC is a one-time tax unless you have substantially renovated a home. So if a home is not brand new, but it has been renovated up to 90% of the home, it could be subject to GST. Again, I highly advise that you seek out an accountant for more advice on GST, but just know if you are buying a newly constructed home or a pre-sale property, you are going to have to pay GST. And that again is added on to the purchase price amount, and it's calculated as 5% of the purchase price. GST is payable by the buyer. It is very, very rare that a seller would pay for the GST, although that could be negotiated. Now, there are some rebates available for GST for first-time home buyers, but don't even get me started with them because in order to qualify for that rebate, the home has to be $350,000 or less. There are partial exemptions between $350,000 and $450,000, although in the area I service of Langley and the Fraser Valley, finding a new home for $450,000 or less is definitely a challenge. So let's go ahead and talk about the costs that you're going to incur between the offer acceptance time and when you have to remove your subjects or your conditions. One of the common costs that's going to come up is an appraisal. Now, this may or may not be required by your lender, but it's becoming more and more common. And what this is the lender sending out their own representative to make sure that they are on board with the purchase price that you have offered on that property. They want to make sure that they agree with the value of the home before they lend you the money. An appraiser generally walks through the property, and it's common to see them take photos. They might do some measurements and ask some general questions about that particular property. This is going to cost you anywhere between $300 to $500, again, dependent on the property type. Another common expense during the accepted offer period is a home inspection. Now, this isn't mandatory, although it is highly recommended that a buyer gets one before putting their down payment down on a property. The home inspector will check the condition of the roof, the hot water tank, the furnace, if any, if there's a heat pump, AC unit. They'll check the appliances, and they also have moisture meters where they'll check all the seals on the windows, around the toilets, and provide you an overall summary of the condition of the property. So home inspections might help you get ahead of any problems that are going to get worse, and a home inspection can also save you money. So if the home inspector finds something that's going to be quite costly, it's not uncommon for that buyer to go back and be able to renegotiate the offer price based on the cost of that particular repair. Other types of inspections that you may have to get during your subject removal period include a septic and a well inspection. That will depend on the property type. So in more rural areas of Langley, for example, we still have homes that are on septic and well, and it's highly recommended you get these checked out before removing conditions. A survey certificate may be required by your mortgage lender. So what this is a document that outlines the boundary of a property. Your mortgage lender might require it should you be buying a detached property. Now, depending on how old the property is and if they have an electronic survey certificate available at the township or the city, it could run you anywhere between $20 and $100. But most of the time, the seller's agent should have this on file most of the time. So those are the main costs you're going to want to be aware of up to the point of now removing conditions and going ahead with the purchase of your brand new property. So your deposit is due after you remove conditions, or subjects as we call them. And the deposit amount is roughly 5% of the purchase price. Now, this is different than your down payment amount. So you may be required to increase the amount of your down payment depending on the purchase price and what you're comfortable with. The time when you would increase your down payment would be at completion, which is usually anywhere between 30 to 90 days from when you remove your conditions. And it's important to note that that deposit amount is held in a trust account at your buyer's agent's brokerage, and that deposit goes towards your total down payment amount. Now, some costs you are going to want to start to be thinking about before you complete on the property and you get the keys include things like home insurance. So home insurance is going to be dependent on the property type that you have purchased. So for condos, it's highly recommended that the contents within your unit are insured, and that if your unit causes damage or harm to a neighboring unit, that you're not on the hook for the building's insurance policy deductibles. Or even worse, you might be out completely for that entire repair if you don't have the proper insurance on your condo. Please speak to an insurance broker and make sure that you have the correct insurance for your property type. Now, home insurance can run anywhere between $400 to upwards of $1,000, again, depending on the property that you have. So definitely for a detached home, you for sure need home insurance. However, for a condo, the building is insured, but please make sure you get insurance for the contents of your unit and protection against anything happening within the neighboring properties, just to really make sure you're in a good, solid position. Okay, so now you're getting ready for completion to sign off on all your purchase documents at the lawyers, and here are some costs that are going to come up during that time. The biggest one being property transfer tax. So property transfer tax is payable at completion in a separate payment. It is not worked into your mortgage. That is a very big thing to note. Property transfer tax is calculated in a tiered system. It's 1% of the first $200,000, and it's 2% on the amount between $200,000 and $2 million. Any property values between $2 million and $3 million are taxed 3%, and on any value above the $3 million mark, there's an additional 2%, so 5% total on any value of $3 million plus. So using an example of $1 million property in BC, the property transfer tax amount payable would be 1% of the first $200,000, so $2,000, and then an additional 2% on the value between $200,000 up to $2 million, which works out to $16,000. So the total property transfer tax due on $1 million property in BC is $18,000. And again, that is payable on completion day. In BC, we have something that's called the Statement of Adjustments. And what you will find on here are things like property tax adjustments, strata fee adjustments, and small things that need to be adjusted based on the time of year that you're moving into that property. So for example, let's look at property tax. So in BC, we get property tax due on July 1st. But if you're a buyer and you're moving in halfway through that year, you're going to be responsible for paying the seller back for 6 months of the property taxes that were due that year, assuming that they had paid in advance. On the Statement of Adjustments, for example, you're going to see property tax adjustments. Each party is responsible for paying their portion of the property tax for any given year. In many cases, the seller might have prepaid the taxes for that entire year. So what happens when the buyer moves in, say halfway through the year, is that they would be responsible for reimbursing the seller for that 6 months of property taxes because they weren't living in the property for half the year. Another example would be strata fee adjustment. So similar to property tax adjustments, these are calculated based on when the new buyer takes ownership of that property. So a seller pays out the strata fee for the entire month. And for example, if a buyer moves in on the 16th day, the seller would be responsible for paying for the first 15 days of the strata fee, and the buyer would be responsible for paying the last 15 days of that given month. Adjustments like these will be found on your Statement of Adjustments. They are calculated by your lawyer, and they will be paid out on adjustment day, which usually is the same day as possession. The legal fees on a purchase run anywhere from $1,200 to $1,500 depending on the type of property. Strata purchases can cost a little bit more because they have to order strata documents for that particular strata. Now you can use a lawyer or a notary. Both can handle a real estate transaction, but I would caution you not to cheap out on this particular step because it's a very important one and one that you want done correctly. Now, if you're purchasing a property and you're having to sell your property in order to purchase that property, so say an upsize, one thing I really recommend you look into before doing anything is seeing what the cost of breaking your current mortgage would be. So for example, in a 5-year fixed term, if you change or break that mortgage within the 5-year term, there's a fee that's associated with you doing that, because when you went to sign that mortgage originally, you made a promise that you were going to pay your mortgage for the duration of those 5 years. Now, when that changes, the bank's going to want their equity out and they're going to charge you a fee in order to get that back. Again, I'm not a mortgage broker. I suggest you talk to your mortgage broker or your bank ahead of time to find out what that fee is, because you don't want to purchase your new property, be all excited, and then when you go to talk to your mortgage broker about, hey, I bought this property, you know, what are we going to do about my current mortgage? You might be rudely awakened by a massive bill. I've seen it be thousands, in some cases tens of thousands of dollars, depending on what kind of a mortgage they purchased with that particular lender. Now, in a variable mortgage, and again, I'm not a mortgage broker, but usually it's around 3 months interest that they charge you for breaking your term. With a fixed mortgage rate, it's going to be a lot more. So 60% of Canadians break their mortgage, and that's based on a 5-year fix. So 6 out of every 10 people are going to have to pay some sort of fee for breaking their mortgage early. And I really want to make sure you minimize your risk by asking these questions up front before purchasing a property. Another expense to think about is moving costs. So I have had clients that have rented a U-Haul to save some money and move themselves, but movers generally cost anywhere between $1,000 to $2,000 depending on the amount that you have to move and also the distance that that's traveling. But if you're like me and you're over 30, paying for movers is worth its weight in gold. One disclaimer I'll make as well is if you are a foreign buyer and you're not a Canadian citizen, you would have additional taxes payable. I'm not going to go into that that in this video, but just something to be aware of. Other considerations you might want to make prior to moving into your property include mail forwarding by Canada Post to make sure that all your mail is going to your new property, and you can do this ahead of time. Some utility companies might charge you around $50 to hook up power or their services for their first time, so just make sure you account for that. And utilities include hydro, Fortis gas if there's a gas system on the property, and also things like Wi-Fi and cable. So my rule of thumb is always set aside between 3 and 5% of your purchase price for closing costs and just unexpected things that could happen once you move into your property. I hope you guys found this information to be beneficial. Just a reminder, if you are enjoying my content, please hit the like and subscribe button to help me grow my community and help people like you understand more about the local real estate market. If you guys want to book an appointment with me, you can do so by clicking the link below that will allow you to book a 30-minute call with me where we can talk about all things real estate. Thanks again for watching, and I will talk to you guys soon.